Hello everyone, good evening and welcome to today's session. So today we are going to continue our chapter number 3. So let's continue and let's discuss chapter number 3. Before that we proceed, before we deep dive into the chapter number 3 further, let's see what we have discussed till now. Just a quick revision and then we will proceed to the next topic. Okay, so till now what we have discussed here is that we have discussed SA 600, SA 610, and we have discussed about the audit planning, audit program, and detailed, the way we need to draft the audit plan, which includes my overall audit strategy. Somewhat, we discuss about the RCM risk assessment. We discuss about the detailed overall audit strategy that we need to develop. We need to develop then audit plan on the basis of that audit program. And then we saw the use of using the work of another auditor. Then we saw using the work of internal auditor. Now we will be discussing using the work of auditors expert. Very important topic. Okay, so can someone tell me when we are required to use SA 620? Anyone?
Many exam requires some expertise valuation like approval valuation or any fixed any assets where valuation is needed. Even ASIPF for that some valuation results that valuation will be done. So who is expert in that, we will be taking their help.
Okay. Okay, great. Anyone else with a different answer or something else they want to add? Okay. So, as correctly said, that when we are talking about auditors expert, they are an expert possessing expertise in field other than accounting and auditing. Okay, they possess expertise in field other than accounting and auditing. Now, let me ask you a question. Can auditor expert help management also?
Yes, sir.
Okay. Anyone other than that? Can auditors expert help management also?
No, sir. Auditors expert cannot help management as the management has to hire its own management expert. If auditors expert will help management to prepare any financials or any other document, then auditor has to think about whether to use his work or not as auditor's expert.
Yes, very good. So here we need to understand what is the difference between management's expert and auditor's expert, and when we call that person as an auditor expert and when that person will be a management expert. So our SA 620 is using the work of an auditor's expert. Now, when I talk about auditor's expert, basically that auditor's expert is an external person. So this auditor's expert, I am referring to an external person, not the internal one. Okay. Can anyone tell me, if we have an internal team member who is an expert, can I call him? Why can't I call him as an auditor's expert? Why can't auditor's expert be an internal person?
Integrity, independence.
Okay. Anyone else?
It can be internal member also. It is not necessary that it should be a person who is external to him.
Anyone else with a different answer?
Sir, if the person has the knowledge related other than auditing and accounting, then he can be the auditor's expert, whether he is internal or audit team member.
Okay, yes. So auditor's expert can be internal. It's not like that he has to be always an external, as you correctly pointed out. He can be internal, but what if he like, if I say internal can also be a team member. In that case, he will be part of engagement team rather than the auditor's expert. So we need to understand whether he's a part of the engagement team or he's an auditor's expert. Because if he's the part of the engagement team, then he becomes the auditor. He will not be an auditor's expert. So that's why mostly I would refer him as an external, but yes, he can be internal also. So not necessary only external, but in certain cases he can be internal also. Auditor's expert, external or internal, but other than the team member. For example, you have some specific partner within the firm, or you have some guys, or you have some team members, not team members, you have some within that firm itself, some people with the knowledge of some different field other than accounting or audit. Okay, basically when I talk about expert, auditor's expert, they are someone who already possess the knowledge other than the accounting and auditing. So these expert possess uh, expertise in field other than accounting and auditing. Can someone tell me why I'm excluding accounting and auditing? Why I'm excluding accounting and auditing over here?
We are chartered accountants and we are supposed to have that expert level expertise in these two areas. So necessarily it is not that kind of thing that auditor, he himself will not have any knowledge in this particular areas.
Absolutely correct. Yes. So as a chartered accountant, we are expected to have the knowledge of accounting and auditing. That's why when I say auditor's expert, he is something, in the field other than the accounting and auditing. Now, can auditor's expert be an organization or he has to be an individual? Yes, Hemant, very good.
Sir, it can be a organization or individual both.
Yes. So, auditor's expert can be individual plus organization. Not necessarily he has to be an individual. He can be individual and organization or organization. Perfectly fine. And the work of auditor's expert is basically used by the auditor to obtain sufficient and appropriate audit evidence. So here the ultimate goal of using auditor's expert is to obtain sufficient and appropriate audit evidence. Now, this is auditor's expert. Now, if I talk about management's expert, okay, management expert, again, same. Expert possessing expertise in the field of other than accounting and auditing. Possessing expertise in field of accounting and auditing. Again, here can be individual or organization. But here, this particular management expert help entity in preparing FS. So here the management expert's role is to help entity in preparation of FS. That's why I cannot allow my auditor expert to help management. If he helps management, then there will be a conflict of interest because he will be involved in preparing the financial statement. On the same side, I will be using that expert to obtain sufficient and appropriate audit evidence. Clear? Any doubt? Is there an echo of the sound, or are you getting the sound clear? Hello? Okay. Now, let's proceed to the next part here, that we need to understand that what is the role of auditor's expert in detail, and then we need to understand how to use it work. Okay. So first of all, here the work of auditor's expert. Yes. Okay. Any questions, Sumit? Okay. No. So the work of auditor's expert here basically is with respect to helping auditor to obtain appropriate and sufficient audit evidence. Sufficient and appropriate audit evidence. Now, when I talk about sufficient and appropriate audit evidence, do you think I can refer his work in the final report or the audit report that I will prepare? Am I allowed to refer his work?
Yes, sir.
Okay. Anyone else with a
Sir,
different
can you
answer?
repeat your question once again?
Am I allowed to refer the work of expert, auditor's expert in the audit report?
Sir, generally it is not allowed to refer the work of the auditor's expert, but if required by any law, then then we can refer his work as whether we using the work, the auditor's responsibility is not reduced to do his work.
Yes, correct. So here, auditor's work should not be referred because it is not reducing the responsibility of the auditor to obtain sufficient and appropriate audit evidence. Basically, the same way, if we are using internal auditor, it does not reduce our responsibility. If we are using auditor's expert, it does not reduce our responsibility as an auditor. So to obtain sufficient and appropriate audit evidence, he can help. But at the end, ultimately, we are responsible. So ultimate responsibility lies with auditor. Ultimate responsibility of obtaining sufficient and appropriate audit evidence lies with auditor. So I cannot say that, okay, I hired auditor's expert and I am relieved from that responsibility. Answer is no. It is auditor's responsibility at the end to obtain sufficient and appropriate audit evidence. Can someone give me some examples, like, where I can hire auditor's expert? Like, some real life examples if you have if you have seen.
In case of any valuation where I cannot have a detailed knowledge of that thing, it can be about valuation of any property or any financial instrument.
So I'll say valuation of land and building. Okay, good. Anyone else?
Can
Uh,
also be for interpretation of any
Interpretation of any?
laws or regulations. Like if say I am auditing any entity whose component is there not in India, it can be from a foreign country. So interpreting their laws and regulation and understanding their financial reporting framework, I cannot have a expertise knowledge in that field. I can hire expert so that we can be sure that the component is following the proper procedure.
Correct. So legal interpretation. Okay. Legal interpretations. Anything else?
As auditor, I may appoint my another cost accountant to appoint him and assign him to check the cost techniques and manufacturing costs ascertained by the auditee client.
Okay. So kind of valuation for the complex cost issues.
Yes, sir.
Okay. Cost accounting. Anything else?
Sir, for taxation purpose also, as I have seen in my office or for taxation purpose also we can hire experts for like just related to if we do not work do not do any appeal work and we have to do this, then also we can hire the auditor's expert.
But how he will help you in the audit? Let's say you hired an auditor's expert for any appeal. So how he will help you? Again, it will be either legal interpretations that we already covered, or if something else, you can say that in case of mergers and acquisitions, valuation of tax credits. So whether we are getting the tax credits or not appropriately, whether we are allowed to carry forward or brought forward losses, something like that. So you can say tax benefit in case of complex transactions, tax benefit in case of complex transactions.
Okay, sir.
Sometimes there is a merger, there is an acquisition between the entities. They were getting benefit under specific clauses like ATIA, IV or something like that. And in that case, once the merger happens, then how they will continue to get that benefit.
Okay, clear, sir.
Anything else that comes in your mind that okay, this could be auditor's expert area?
Sir, while taking inventory or stock taking, in case of any complex nature business area where I cannot be having that much knowledge, how that can be counted. Like in case of oil industries, there may be in process oil which is there right now in the machinery or line or piping areas. I cannot measure that thing. I can have an expert to value that thing.
Yes, absolutely correct. Valuation of you can say oil and gas reserves, estimation of oil and gas reserves. Okay, good, very good. There is one more example Hemant has given, IT area. So if let's say for example verification of some complex logic which is there in the IT systems. So IT expert
Sir,
who
can
can
it also
understand
be
the
the chemical industry? Sir, can it also be the understanding the formulation of a particular chemical in a chemical industry?
yes. So you can say chemical engineer kind of.
Yes.
Yeah. Okay. Yeah. Chemical engineer, chemical areas basically. So these are some examples where we can use auditor's expert, or auditor's experts can be there. For example, another is environmental area, environmental cost and environmental related things. Okay, so if some, basically what happens is, let's say company is into the solar energy generation. Now which site is appropriate, whether that site will give me that much yield of the solar generation or xyz things, that assessment is done by the some environmentalist or some environmental engineers. If there is something, how much solar is generated, how much capacity utilization is there, or some, I need some help with respect to that technical area, in that case I can hire that particular person. So these are the areas where I can have an auditor's expert, and he can help me to get sufficient and appropriate audit evidence in those areas. Clear? Any doubt till now?
Excuse me, sir. Sir, in the book I have read the actuarial calculation of the liabilities. Can you explain these?
So actuarial calculations of the liabilities can be, employee benefit liabilities also.
Okay.
Employee benefit, for example, if someone has to, ESOP is there, how much ESOP is to be recognized, or if you say there is retirement benefit, provident fund, all that stuff, employee
Okay.
benefit liabilities, they are there. Then some liabilities are there with respect to the insurance contract for insurance companies, how to recognize insurance liability. Let's say, for example, I'm receiving the premium, but how to book the provision for the, claims that are yet not booked or yet not received.
Yes, sir. Clear.
So
Thank you, sir.
that is actually liabilities. So I think we are good enough with the understanding of the area where we can use auditor's expert, and ultimate responsibility lies with the auditor. Now, coming to the part where, when auditor has to decide that I need an expert, can anyone tell me when do I decide that I need an expert?
At the time of initial understanding of the entity and its environment and my risk assessment stage planning.
Absolutely correct. Yes. At the start itself, during planning phase or during the overall strategy phase, we decide we need that kind of expert during the audit to obtain sufficient and appropriate audit evidence. So the decision of obtaining the expert happens at the start of the audit. When I'm planning for the audit, when I'm drafting overall audit strategy, and I decide the nature, timing, and extent that auditor's expert may perform, or I may decide that what kind of audit evidence I need, for which I may ask auditor's expert to give me the nature, timing, of extent of the audit procedures he is going to perform. So again, that depends upon the part of the planning that is there. Now, coming to the next area or next point of discussion, that when auditor's expert is hired, okay, can I directly just ask him, okay, go perform this procedure, or I need to check something before I ask him to perform the procedures? Basically, my question is that when I am appointing an auditor's expert, can I appoint auditor's expert directly, or I need to, perform some procedures before appointing him?
Sir,
Communicate with management or those charged with governance about the use of audit expert.
Okay. Anyone else?
Significance, complexity level of the matter in which I am to use that auditor's expert work, and my risk assessments also.
Okay. Anyone else?
Sir, first the auditor should check whether the expert to whom he is going to giving work is working with management as management expert or not, and his competency and capabilities to do that work in which the auditor is want to give him the work, he should check.
Okay, great. Yes, yes. Basically, you guys have correctly pointed out. So basically, if I summarize, I need to check the objectivity, the threat to the independence, the threat to the fundamental principles, whether he has any interest or relationship with the entity, his capability and competency. So I call this particular part as a CCO. That is, I check CCO, that is competency. So competence, just a minute, sorry. Yeah. Then second is your capabilities. And then you have a third as an objectivity. Once I verify all these three, then I decide, then I conclude that, okay, I can go with this auditor or not. Now, in case of competency, what will you do? How will you verify the competency of the auditor's expert?
Is he holding any professional kind of degree or a knowledge or diploma something? I will check his qualification and his experience in the field.
Okay. Anyone else? No? So basically, what I will do if I have to work with an auditor's expert, first of all, I will check whether I'm working for the first time or I have worked previously. So if I'm working with the auditor's expert for the first time, in that case, yes, I need to do some more checking, I need to do some more analysis. But if I have worked with that expert previously also, so what was my outcome, when I worked with him previously, what results I obtained, whether I was satisfied or not, that really helps me to understand his work. Secondly, what happens is that, okay, if I'm working for the first time with that expert, I may check his professional degrees, knowledge, expertise, from where he has done his, obtained his degrees or qualifications. I may check whether he's a member of any professional body, what code of ethics he is following, and what uh, background knowledge he has about that particular topic. For example, I'm hiring him for complex tax transactions. Now, if I'm hiring him for complex tax transactions, in that case, has he performed that particular kind of tax calculations or computations, or work previously? Does he have that much knowledge about the topic? Has he having any, or has he have any previous experience in such kind of complex tax transactions? So based on that, I finally decide whether to go with the auditor's expert or not. That gives me the question, or that gives me the comfort on the competency. Now, coming to the part of the capabilities. Capability is kind of, whether he will be able to perform that work right now or not. Whether he is as of now capable to perform that particular work. Capable in the sense, let's say for example, that work requires more than one person or a team. Let's say I hire an organization. In that case, capability goes to that, okay, whether he has sufficient time and resource to perform that work. If yes, then he has the capability to perform as of now. And the third part is the objectivity, which is very, very relevant, because is there any threat For example, self-interest threat, advocacy, familiarity, self-review, intimidation threat, whether any safeguards are required to be applied or whether he has applied, what is the level of threat as of now. We will see in examples also, but these are the things we actually check when we hire a auditors expert. So CCO, that is competency, capabilities and objectivity, is something we check before we appoint the auditors expert. Clear? Now let's say I hired this particular auditors expert for the purpose of complex tax transactions. Who will decide what to do for those tax transactions? Whether the auditors expert will decide or whether I will decide? Anyone?
Basically, the risk assessment is the auditor's own work, and based on that, he will decide what to do. And he is just taking help of his expert knowledge.
Okay. Anyone else? So when I talk about auditor's expert, his area of work, okay, in that case, as you correctly said, the auditor will decide the nature, scope and objective of the expert work. Basically, auditor will be responsible to obtain understanding of the field of expertise of auditor's expert. Basically, I should know why I'm hiring auditor's expert, in which area I'm hiring auditor's expert, and what he's going to do in that area. That understanding should be there with me. So obtaining understanding of auditor's expert area. There, I as an auditor have to decide the scope, nature, timing, and extent of the procedures that auditor's expert will perform. I should have that kind of understanding. And then on the basis of that, I need to determine whether the work that has been performed by the auditor's expert is adequate or not. So adequacy of the work. This is something as an auditor I am required to do. Clear? Any doubt? Any doubt? Okay, no doubt. So my next question is, who is required to sign engagement letter with auditor's expert, whether management or auditor? Let's say, for example, Mr. A is auditor, Mr. B is auditor's expert. They both are auditing XYZ Limited. Now, Mr. A decided to hire Mr. B, the auditor's expert. So, Mr. A asked XYZ Limited to sign an engagement letter between both of them, that XYZ Limited will provide data to Mr. B that is required for his work. Now tell me, is there any issue in this whole particular part where XYZ Limited is having engagement letter signed with Mr. B?
While using the expert word, this is the arrangement between the auditor and the expert. So they both the parties are they are actually the parties to the agreement between themselves. They cannot have a third party or entity of that auditor to get involved in this kind of situation. It can be the agreement between these two persons only, where they can describe their scope of work and responsibilities, divisions, everything.
Absolutely correct. Yes. Yes. Basically, XYZ Limited and Mr. B cannot have an engagement letter because Mr. B is hired by Mr. A, the auditor himself. The auditor is responsible here. The ultimate responsibility lies with the auditor. And that's why the engagement letter should be between Mr. A and Mr. B. Not with the XYZ Limited. No, that should not be the case. The case should be that, okay, A and B are having engagement letter. They both signing engagement letter for the auditor's expert. Now, then from this, we come to the next area. Engagement letter between auditor and auditor's expert. Now tell me, what are the clauses or what are the things that I should specify in the engagement letter? Let's say I am the auditor, Mr. A. I am drafting engagement letter for Mr. B, that he will sign that engagement letter. What things should I include in that engagement letter? So areas that are required to be included. Tell me, which are those areas that I should include in the engagement letter?
Nature, timing, extent of his work, basically the objective with the expert. Why am I entering into this kind of agreement with him? I will explain him the timings at which we are again going to interact with each other, having communication, coordination, and also there will be a clear line of identification between their roles and responsibilities relating to the work. And he will most importantly include a clause relating to confidentiality of the information whatever he is having through this engagement.
Good. Anything else? Anything you might think should be part of that particular engagement letter? Okay, basically, what are the areas? As you correctly said, some of the areas. Yes, the first area is nature, timing, and extent of audit procedures, or the procedures, rather not audit procedures, but the procedure that will be performed by the auditor's expert. Procedures to be performed by auditor's expert. Second is the relevant technical standards or other professional or industrial requirements that he will follow. You can also say, that will be part of the nature, timing, and extent, but you can say that, okay, technical standards or professional standards, auditor's expert will follow. The scope and objective of auditor's expert Then apart from that, the assumptions or method or the models that auditors expert will use, assumption, methods, models, etc., that auditors expert will use, the roles and responsibility that the expert will have and the auditor will have. So both, remember, when we draft an engagement letter with the management, we include what is the auditor's responsibility and we include what is the management responsibility in that particular engagement letter. Same way we will have auditor's responsibility plus auditor's expert's responsibility in that engagement letter. Plus we will specify the use of expert's work, how his work will be used. Sometimes, this is a very big litigative area, because what happens is sometimes when we use auditors experts work in obtaining sufficient and appropriate audit evidence, if let's say for example this particular part is not agreed with the auditor's expert, then they may object that you cannot use our report to issue an opinion on the financial statement. Sometimes happens, yeah, it's a very litigative area. So that's why use of the auditor's expert work should be clearly specified in the engagement letter, that yes, we will be using your report, we will be using your work in order to issue an opinion and in order to obtain sufficient and appropriate audit evidence. Then the disclosure of the auditor's expert report or the details of auditor's expert. Disclosure of use of auditor's experts work. So in certain cases, yes, we are required to disclose in the audit report about the auditor's expert work in certain cases. In our communication to the management and those charged with governance, we will refer to the auditor's expert work. We will inform that, okay, we have hired auditor's expert. In our plan, in our strategy, in our program, we will specify the auditor's expert, and that plan strategy will be shared with the management and those charged with governance. So they will be getting the details of the auditor's expert, and we will specify that in our engagement letter with the expert. Okay, we will be using your name, that you are working with us, you are assisting us in this particular area, and management, or if required, we will specify your name in the audit report. Then confidentiality. As correctly pointed out earlier, confidentiality is very good part. Then very important part is the evaluation of adequacy. We also specify that how we are going to evaluate your work in order to understand that whether your work is relevant, reasonable, and whether we can use your conclusions or finding or not. Let's say, for example, I hired an auditor's expert in the area of complex tax transactions. At the end, he gave me a conclusion: you cannot brought forward the loss. You cannot use the loss of the earlier companies after getting merged. And I have some other opinion from some other person, and or let's say I have the knowledge somehow, partial knowledge in the matter that I can use. But for the confirmation and for the, what you can say, on paper, and or you can say for surety, to be double sure, I am using an auditor's expert, but he's giving me some other opinion than what I already know. In that case, let's say I hired another auditor's expert, and that happens that once I hire an expert, I obtain a legal opinion from him with respect to XYZ thing, or I obtain an opinion. Then in that cases, I'm not comfortable. I go with some other expert. He gives me another opinion. In that case, we have to specify this in our engagement letter that if we do not identify your work to be adequate, in that case, what will be the things, how you will be, informed that your work is not adequate? Will you be required to rework? Will you be required to change your opinion, or what is required in that particular scenario? That is very important, and that is should be part of your engagement letter with the auditor's expert. Sometimes auditors expert take some kind of assumptions with which we are not comfortable. For example, in case of oil and gas reserve estimation, so they may take the assumption, okay, this is the density of the oil, or this is the density of the liquid gas, which might not coincide, or which might not be relevant, or might not be correct in that particular scenario based on the some partial information that we have. So in that case, we may go back to the auditor's expert, and we'll inform them, okay, in the agreement itself we agreed with you that, okay, if we are not appropriately happy, or if we are not comfortable with the assumptions that you are using, you may need to reconsider the assumptions that you are using, or we may not find your work adequate. So all these things are required to be mentioned in your engagement letter with the auditor's expert. Then documentation, that we should, as an auditor, should have the access to the all the documentation relating to this particular work. Plus, you will follow quality control. So you can say kind of reference of SA 220 plus 230. We will ask him to follow the documentation part and the quality control part both. And when I say documentation, we will also discuss the ownership will lie with the ownership of the documentation that you are preparing will lie with the auditor, not the auditor's expert. So at the end, you have to submit all the documentation to us. So then the last part that we will include in our engagement letter is the communication. Let's say, for example, you hired an auditor's expert, okay, and later on what he did is, after performing all the work, he visited to you and he said, okay, just he wrote an email, this is the estimated oil stock that the company has, one-liner email. Will you accept that email? Answer is no, because you need in a specific format that what oil reserve company is having, how you calculated that oil reserve, what methodology you adopted, what you can say assumptions you took, model you used. All those things are required to be understood. Just sending one-liner email to the auditor that, okay, this is the oil reserve as per our calculation, is not sufficient. That's why the way of the communication, the mode of the communication, the format of the communication is very important, and that should be clearly specified in the engagement letter. Plus, any communication that the auditor's expert will do with the management if required to be done, or with any external person, external party, or external regulator that he is required to do based on his based on the laws or regulations that are applicable to him. So these are the things or areas that are required to be mentioned in the engagement letter with the auditor's expert. Clear? Any doubt? Yes, no? Okay. If no doubts, then let's proceed to understand the very important area, that is evaluation of the adequacy of the work. We discussed in our engagement letter also with the auditor's expert that we will specify this part, that we will evaluate the adequacy of the work. Now let's understand how to evaluate that. How to evaluate the adequacy of the work. So, can anyone tell me how will you ensure the work is adequate?
By looking into how the work has been performed by the expert, which methods and assumptions have been used by him, and whether the conclusions or whatever procedures he has made are relevant for the purpose of my audit or not.
Yes, very good. Anyone else with something more?
Reviewing his working papers,
Okay.
to check how he's working, and if there are any calculations, just recalculating it, whether the calculations are fine. If he has drawn some values from any established data, to check that whether the values are drawn properly.
Okay. Anyone else? How will you evaluate the adequacy of the work that is performed by the auditor's expert? Whether the significant finding of auditor's expert are relevant, okay. His finding should be consistent with our finding, good. Or evidence that we have obtained, yes, good, very good. Anyone else? Anyone? No? Okay. So, when I have to refer to the auditor's expert work, when I have to decide whether the work that is performed by the auditor's expert is adequate for me, for that I will check 2R. Okay, that I call it 2Rs, R&R. Basically, I will verify relevance of the work and reasonableness of the work. That is R&R that I call it. Now, R&R is required to be performed for the finding, conclusions, and consistency with the other audit evidence. Okay. R&R with respect to assumptions, methods, models that is being used in the circumstance. So basically, you can say that I will perform R&R for the findings, conclusions, consistency, with other audit evidence. Then you can say methods that are used, models that are used, assumptions that are made, whether that assumptions are reasonable or relevant enough. Plus, very important part, source data. For this source data, I will perform the relevance check, completeness check, and the accuracy check. So here I will not go with the reasonableness. No. When I come to a source data, it is more than the reasonableness I need to go. Reasonableness for the method, model, and assumptions, fine. For the findings, conclusion, and consistency with the other audit evidence, fine. But I cannot say that for the source data. For the source data, relevance is there. Yes, whether the source data is relevant or not, whether the source data is accurate or not. And the third part of that source data is completeness, not the reasonableness. So I'll write it here. And I'll specifically cut it out that I am not required to check the reasonableness, rather beyond reasonableness, I am required to check completeness of that source data. Because source data is something that which is very critical when it comes to the, preparing the work, doing the following the methods, assumptions, and everything. If your input is wrong, then your output is going to be wrong. Okay. So sometimes we call it garbage in, garbage out. So you provide the garbage, you get the garbage, irrespective of the machinery that you are using or irrespective of the methods you are using. Yes, Pooja.
So I will also look into the reliability of that source data, whether there is any internal control efficiently having control over the maintenance of that database.
Yes, reliability is required to be checked, and that's why I'm saying the accuracy of that source data. That the source data should be accurate that I'm using, or that is being used by the auditor's expert. That's why the three element, that is completeness, relevant, or accurate, or you can call it CAR: completeness, accuracy, and relevance. So for the source data, I will check CAR, that is completeness, accuracy, and relevance of that source data. If the data is accurate, I can rely on that data. So reliability comes with the accuracy of the data. Clear? So I need something beyond reasonableness in this case. That's why I go to the completeness, relevance, and then accuracy. And for the method, model, assumptions, finding, conclusions, consistency with the other evidence, I'm fine with the reasonable and relevance. That is R&R. Any doubt? Hemant, with respect to your question, what happens most of the time, auditor's expert provide us the list of the data he needs to perform this work, and we ask entity to provide that data to us, and then we share that with data with the auditor's expert. So sometimes that information is an IPE, information produced by the entity. We will see that what is IPE in the coming lectures. Also, we will discuss on this particular topic, what is information produced by the entity and how we can use that information. Okay, if we have to rely upon that information, then how we have to rely upon that information. When we will see SA 500 also, at that point in time, we will go back to this topic, that is information produced by the entity. Even in the SA 315, at that time also we will discuss this particular part, information produced by the entity that becomes the source data for the your auditor's expert. Clear? Any doubt? Any doubt? So we discussed that the ultimate responsibility of obtaining sufficient and audit evidence lies with the auditor. As a result, Auditor cannot refer the work of auditor's expert in the audit report unless there are certain scenarios that we need to understand now. So, when the auditor's work is required to be referred in the audit report because of XYZ reason, in that case, what is required to be done by the auditor, that we will understand now. That is reference to auditor's expert work in audit report. Okay. Now, usually I should not refer. So the basic thing is auditor should not refer. Auditor should not refer the work. That is the prime thing, the basic thing. Now, in two situations, I can refer the work. So you can say this is an exception. Except when it is required by law, or it is necessary for the understanding, and reference is required to be given for the understanding of a modification. So if I am qualifying my report based on the work that is performed by auditor's expert, then I can refer his work. So understanding of a modification. So if you have an understanding of a modification or required by law, in such a case, work of auditor's expert can be referred. But with a statement that it will not reduce the auditor's responsibility. Okay, with statement that it will not reduce the auditor's responsibility. If you include this statement, then it is perfectly fine. Then you can refer the work by the auditor's expert, which is performed by the auditor's expert. Clear?
Sir,
Yes.
do we have to give this reference under other matter paragraph also? As we have already earlier seen that if you are using another auditor's report, then you have to give that reference under other matter paragraph.
No, it's not in the reference in the other matter paragraph, rather in the modification, or when it is required by the law, basically. So wherever you are giving that reference in based on the law. So in audit report we have a separate section for the other regulatory matters. So if you are required to refer over then at that particular part only you need to mention this. Okay, this does not reduce the responsibility of the auditor. So there are two scenarios: one required by law, one understanding of the modification. So whenever there is an modification part, I explain in that area itself that this does not reduce the auditor's responsibility. Plus a reference, if you want, you can give in paragraph for the auditor's responsibility. So in audit report, you have a separate paragraph on the auditor's responsibility. Over there, you can give either with the modification or plus with the auditor's responsibility, but not in other matter paragraph.
Okay, sir.
Any other doubt? Any other doubt, guys? No? If no further doubts, then this is what we have as per SA 620 using the work of an auditor's expert. So this was SA 620. What we will do now is quickly we will go through the same topic from the study material. Quickly we will go through the study material and we will refer this topic over there. Okay. So everyone come to the page number 4.5.3. Over there we have using the work of an auditor's expert. Now this particular first provides the scope of that area, that okay, where in which area this particular essay will be applicable. So this will be applicable in case of situations where other than auditing or other than accounting areas is there, or where there is no management expert, because management expert is something which is dealt by SA 500, and areas where accounting and auditing is concerned, we as a chartered accountant are required to handle that area. Again, what is the objective over here? That whether to use the work of auditor's expert, and if yes, then adequacy of that particular work. And some examples are given of the auditor's expert works. Then you need to determine whether you need an auditor's expert or not. Then you have a consideration while deciding whether to use an auditor's expert. Remember, we discussed like complexity, risk of material misstatement at the start of the engagement itself. At the time of planning, at the time of strategy, we decide whether to use the work of auditor's expert or not. So when we will perform risk assessment, when we will understand the all area, we will decide this particular part. The nature, timing, and extent of the audit procedures. Then competency, capability, and objectivity. Other matters that are relevant may be included. For example, the areas, expertise, competency with the relevant accounting and auditing knowledge. Then evaluation of the significance of threat to objectivity. We will understand the objectivity, that whether there is any self-review threat, whether there is self-interest threat or any other threat. Okay. Then discussing the objectivity, that objectivity part is there that we discussed. Agreement with the auditor's expert. Under obtaining an understanding of the field of auditor's expert that we discussed. Like, okay, as an auditor, is it my responsibility to understand nature, scope, objectives, timing of the procedures that auditor's expert will perform, plus the adequacy of their work. Agreement areas, what are the part or what are the things that be there in the agreement. Evaluating the adequacy of the auditor's expert. Relevance and reasonableness of the findings and conclusions. Then you have a significant assumptions method and relevance and reasonableness of that particular method and assumptions. Then you have the source data, but for source data, we have relevance, completeness, and accuracy, not the reasonableness. Beyond that, when work of the auditor's expert is not adequate, at that time, remember we discussed that in the part of agreement also, if the work is not adequate, then we may ask him to change the work. We may ask him to perform additional procedures that is required based on the assumptions that we will use. That's all things are required also to be mentioned in your engagement letter. Then reference to the auditor's expert in audit report. Usually we shall not refer to the work, but in exceptions like required by law to do so, or in case of there is a modification, and because of the you need for the understanding of a modification, you may refer to the auditor's expert work. So that is SA 620 in your study material. Any doubt?
Sir,
Yes.
Sir, in the study material on page number 3.35, can you go ahead?
3.35.
G.
Okay. Yes.
Under the nature, timing, extent of audit procedures, they have written as point E, whether expert is subject to auditors firms, quality control policies and procedures. And on the very next page, they are also saying that auditors expert is not subject to policies and procedures of firm. So does it
Yes.
mean that they are talking about if the expert is internal to the auditor's firm, then he is subject to the auditor firm's policies and procedures?
Okay, now see, when I am determining the nature, timing, and extent of procedures, I need to understand whether the quality control policies and procedures of the firm are applicable to the expert or not. For example, expert is the internal part of the firm, so as usual, SA 220, 230 will be applicable to him. Let's say he's not internal part of the firm, he's some different organization. So when I will evaluate his competency and capability, at that point in time only I will understand what quality control policies or procedures he is going to follow, whether that policies or procedures are in alignment with my firm's quality control or procedures or policies or not. If not, sometimes what I do is, then in my engagement letter, I ask him to follow something additionally with respect to the quality control and the documentation. So for that, first you need to understand whether the firm's quality control policies and procedures are applicable to him. Yes. Okay, fine. No. Then whether the quality control policies and procedures that are followed by the expert are sufficient or are in line with the firm's quality control policies and procedure. If yes, then fine. If no, means his quality control policies and procedures that are applicable to him are not sufficient or are not in line with the firm's quality control policies and procedures. Then in that case, I may ask him to perform something additionally, or I may ask him to follow something additionally with respect to the quality control and the documentation part.
Okay, sir, clear.
Any other doubt, guys? Any doubt? So now, are you clear with SA 620? Okay. So if no doubt, then just a minute. If no doubt, then we can take up some questions on this particular topic and then we can discuss. These are pretty easy questions. There is nothing difficult in this particular part. Okay. So it's very easy. Yeah. This is a particular case scenario that you are the audit partner responsible for the audit of Evergreen Insurance Company, a large insurance provider. Evergreen offers a variety of insurance products, including life insurance policies with complex embedded options and guarantees. During the audit planning, you identify valuation of these insurance liabilities as a significant risk requiring specialist knowledge. Evergreen engages a renowned or actuarial firm or actuarial experts in INC to perform the actuarial valuation for their life insurance policy. You decide to rely on the work of the actuarial experts in INC as your auditor's expert. You obtain their report, which provides a detailed valuation of the liabilities and outlines the assumption and methodologies used. You are satisfied with the reputation of the actuarial expert INC and the comprehensiveness of their report, and you do not perform any procedure apart from the above mentioned one. During the audit review, your quality control reviewer identifies this omission and raises concern about the potential non-compliance with SA 620. The first question is, analyze the situation and explain why the auditor's actions constitute non-compliance with SA 620. I'll give you 2 minutes. Read the question again and tell me. Why do you think there is a non-compliance to SA 620?
So
Come on.
while using the management's experts work and not going to another external expert, I'm relying on these work. So before using that work, I should make sure of the things that have been there with the expert, like nature, scope, objectives of that management expert's work, whether he is employed by the entity or is he under any engagement with the related parties or not, his objectivity competence I will check, and the extent to which the management can control or influence the work of that management expert. I also have to look into that aspect. I'll look into the technical performance and professional industry requirement or any other standard which will be applicable here. Or all this assessment, after having this all assessment, I will use or rely on the work of that management expert, not plainly. That's why they are saying that here is non-compliance with SA 620.
Okay. Okay. Anyone else? With some different answer or anything they want to add?
Sir,
Hmm.
firstly, as per SA 620, the auditor should not use the work of management expert, and here the auditor has auditor did not done any other audit procedures, and he completely relied upon the actuarial expert's work, which is not correct here.
Yes, very good. Yes. So, yes, if I summarize here, the first thing is that in this case, if I'm using the work of actuarial experts, then it is not an auditor's expert rather than a management expert, first of all, irrespective whether I'm appointing him or not appointing him. If he has done some work for the management, he will going to be management expert for that particular year, for that particular work, irrespective I appoint him as an auditor expert or not. I cannot count that person as an auditor expert for that particular work for that particular year. That is for sure. That means when I'm using the work that is performed by actuarial expert, I'm using some information that is given by the management to me, and the information that is produced by the management through audit management expert, and that falls under the purview of SA 500. So I cannot say that he is an auditor's expert. Number two, when I am, let's say, for example, hypothetical example, let's say if I'm appointing auditors expert also, independent of actuarial experts, okay, if I'm appointing auditors expert also, in that case, I need to check whether the work that is performed by the auditors expert is adequate or not. And I need to check whether the auditors expert are competent, capable, and objective in their work. Means competency, capability, and objectivity. Here, when I obtain the report which provides a detailed valuation of the liability and outlines the assumptions and methodology, if you see that I do not perform any other additional work, apart from the above mentioned one. That is, I just only obtain the report which has detailed valuation, liabilities, and outlines the assumption and methodologies. Nowhere I have, or it is written that I have checked the reasonableness or the relevance of the assumptions or methodologies. So no competency, capability, and objectivity check, no reasonableness and no relevance check, no source data check. So I have not checked the car of the source data, that is completeness, accuracy, and the relevance. I have not performed any procedure. I have directly accepted the report, and just by seeing the reputation of the actuarial experts, that is gross non-compliance to the SA 620. And then I'm saying that this particular person is an auditor's expert. That is not appropriate at all. Not appropriate. So from start to end, I did not perform anything, and I'm directly accepting the report is a non-compliance. Clear? Any doubt? Okay. Let us see one more question, and then we will, continue the session. Let us see one more question. Very good question. You are the auditor for a manufacturing company, Steel Forge Limited, which produces specialized machinery. A significant portion of the steel forge asset comprises complex plant and machinery with customized components. During your audit, you identify the valuation of this plant and machinery as significant. Steel Forge engages an independent valuer, Industrial Valuation Services, to provide a valuation report for their plant and machinery. IVS has a good reputation and extensive experience in the valuing industrial equipment. You obtain their report, which includes detailed valuation and description of the valuation technique used. However, you notice that the valuation report from the IVS relies heavily on the discounted cash flow model. While you understand the general concept of this model, you lack specific expertise to evaluate its appropriateness or the reasonableness of the assumption used by IVS, such as projected cash flow and discount rates. You accept the valuation report without further investigation or consultation, as you do not want to challenge the IVS work as they are independent. And as per your understanding, auditors can rely upon the work performed by independent expert. Furthermore, you decide to refer the work performed by expert in your report in EOM paragraph, as it would be necessary for the user understanding of the financial statement. Now here, the first question is, analyze the auditor's approach using the work of valuer in this scenario and identify specific deviations from the requirement of SA 620. You tell me what are the deviations from the requirement of SA 620, if there are any, and what auditor has done which is not appropriate. Pretty easy, straightforward. I'll give you a minute to read the question and then answer.
So the question says that he lacks specific expertise to evaluate its appropriateness or reasonableness of the assumptions which the auditor have to do to check that the report, means to rely on the report given by that expert. He is not checking that, it is his diversion. And he is also referring that his work performed by expert in audit report, which he is not supposed to, because the responsibility is on the auditor, and he can't give that to the expert, any expert.
Yes, good. Anyone else would like to add something?
Sir, here when it is the IVS IVS is where यानी भले ही IVS एक इंडिपेंडेंट वैल्यूअर है, बट इट इज मैनेजमेंट ऑडिटर, नॉट एन ऑडिटर्स एक्सपर्ट. And on this part, all the auditor, firstly, he should not rely completely on the management's auditor's report, because it may be risky for its objectivity. And okay, sir. Thank you.
No, continue. You are going correct.
Sir, actually, I'm going confused in my mind while I'm speaking.
Perfectly fine. Speak in whatever language you are comfortable. Don't worry on that part. So whatever language you are comfortable, you can speak.
And sir, यहाँ पर एक ये भी यानी डेविएशन है कि ऑडिटर्स को पता है कि sorry sir.
No issues. Perfectly fine. Don't worry on that.
And future cash flows and discount rates will be discussed with the management, because the expert can't by himself assume that this will be the cash flow or discount rate, where the management estimation is involved. So it is to be checked by auditor precisely.
Yes, correct. Now there are multiple elements involved in this particular question. One, again, I'm saying that management expert, I'm relying on the management expert without checking the work. Without checking the work of management expert, I'm directly relying on that expert. I'm saying that he's an auditor's expert. I cannot do that. Okay, number one. Number two, if I say he's a management expert, again, when the question comes on the projected cash flow, discount rates, it is kind of an estimate involved. We will see in the next, after the break itself, that how estimates are required to be looked into, how estimates are required to be audited by the auditor, which are prepared by the management, and how to evaluate management biasness in those basically estimates. So when I say IVS is a management expert, again, I need to go and check whether is there any management biasness in those estimates. For example, discount rate. If you just change the discount rate, everything will change. Projected future cash flow will change drastically. So sometimes we perform sensitivity analysis, that by decreasing or increasing 1% of the discount rate, how much impact is there in the future cash flow, keeping all things constant. Same way, whatever estimate or assumptions are made, we perform sensitivity analysis of those assumptions and we check how much sensitive they are to the change. The more the sensitive they are, the more the risk lies in those assumptions. And then we need to check the higher sensitive assumptions or areas in with more care and more skepticism for the management biasness. Okay, so sensitivity analysis, understanding the assumptions, for example, discount rate, is something the auditor should do. And saying that, okay, he's an independent expert, I will not investigate further or consult, and I don't want to challenge the work of the expert because he's an independent, is incorrect. Now comes to the part where I'm referring the work of an expert in the report. I should not. First of all, he is not an auditor's expert. Second, it is not required by law. It is not a modification. So in any given case, I should not refer the work of that particular expert in my audit report. Okay, so here referring the work is incorrect and it is not necessary for the user understanding of the financial statement. Clear? So again, you can say from start to end, everything was deviated from SA 620. Any doubt? Any doubt, guys? Okay, if no doubt, then let's take a quick 10-minute break, and after the break, we'll continue the session. Okay, let's take a quick 10-minute break. Yeah. session. Let's continue. Let's discuss further on the topic of chapter 3, and let's deep dive into the next topic, that is essay 540. Now, essay 540 is something with respect to the auditing accounting estimates, including fair value accounting estimate and related disclosures. So here we will understand that how to audit accounting estimates and their related disclosures in the financial statement. Okay, very important topic, and just similar to the line, similar on the lines what we discussed just before in the last question. Okay, so let's go back to the notes. Okay, starting with a new topic, that new essay, that is essay 540. Now, as the name suggests of this particular essay, that is we are auditing the accounting estimates and their related disclosure. Okay, essay 540. Now, can you tell me some of the areas where do you think, okay, this essay might be applicable, like some of the accounting estimate you think that might be, are there in the financial statement, some examples of those estimates? Anyone?
Fair value accounting estimates.
Okay.
Sir, when depreciation method gets changed, it is also an estimates, and we will use this essay. And
Provisions for different obligations or bad debts provision.
Okay, understood. Anything else? Any other example that comes to your mind with respect to accounting estimates?
sir, related to warranty also, if if our company has given warranty for its product, then also the company will do some provision and do some estimates. Then also we can use this SA 540. Thank you, sir.
Very good. Yes.
In case of merger acquisitions, also when two entities accounting are merged, in that case also we can have a check on compatibility of the estimates and accounting policies that have been followed, whether they they are comparable with each other or not, and if not, there are certain adjustments that have been made in the books of accounts, whether they are correct or not. In that case also we can use this estimate standards on auditing for 540. Sorry.
Yes. Good. Absolutely correct. Any other example?
Sir, it may be applicable to doubtful debt related also.
Yes. Bad debt provisions. Yes. So basically, tell me what is the biggest risk that you see in an accounting estimate? Like, we are required to do audit, but what is the biggest risk that you feel is there in the accounting estimates?
It is decided by management, so there can be management bias.
Yes, very good. Intentional, unintentional management bias. What else? There are two big areas I would say that impact the estimate. One is the intentional, unintentional management biasness. And second, What is the second area you think, okay, could be, the biggest risk for me?
Risk of material misstatements in financial statement.
With respect to estimates.
Yes. If it is not proper or relevant, there can be an risk of material misstatement.
Yes, so for that, the term is estimation uncertainty. So there are two things that we look when it comes to the auditing accounting estimate. One, we understand about the estimation uncertainty. For example, we are saying this is an estimate, so it will lack precision, it will lack accuracy in the measurement. That's why it's an estimate. So the estimation uncertainty is something which is, that how much that estimate is away, or is there is a deviation between the estimate and the actual result that is coming out of it. Okay, so how much the estimate is away from the actual measurement, how much it lacks the precision in the measurement. That is the estimation uncertainty. And second is the management biasness. That is a lack of neutrality by the management. So these are the two very critical parts that we need to understand for the accounting estimates. One, your estimation uncertainty. Second is management biasness or management bias. When I say estimation uncertainty, it is basically lack of precision in its measurement. And when I call biasness, it's a lack of neutrality in the measurement of that particular estimation or presentation. So it could be measurement, it could be preparation, it could be presentation. When I talk about management biasness, lack of neutrality in measurement, preparation, and your presentation. Why presentation is important? Because not only, sometimes estimation is required to be made, but it is also required to be presented in your financial statement, which is required as per either Ind AS or AS or as per Schedule 3. So there are certain estimates for which you are required to give additional disclosures. For example, employee benefits. For example, if there are some, provisions that you made, contingent liabilities, over there could be a management bias in preparation and presentation. So those or that particular lack of neutrality is something that you are required to audit. Now, when I use the term accounting estimate, understand that it is not something, which is definite. When I say estimate, it is in itself lack precision. So I do not have an exact number. That's why I'm using the estimate. And because of that, these two risks, uncertainty and the biasness, comes into the picture. Clear? Any doubt with these two terms? Okay. Now, when I'm performing the risk assessment procedures as per SA 315, okay, when I'm understanding the entity, when I'm understanding the internal controls, at that point in time, I understand what are the accounting estimates that are used by the management in preparation of the financial statement, or that are there as per the required financial reporting framework. So at the time of understanding the entity, I understand the estimations or estimates that are made by the management. I'm not talking about the testing of estimates. I'm just talking about understanding the estimates. So the first thing I do after having, knowing about that, okay, there are some estimates, I understand the estimates. And that I do by performing the risk assessment procedures, as per SA 315. Okay. And in that procedures, I understand few important points. That is one, the requirement for the disclosure. See, here, if you see the name of the auditing standard is that I am auditing the related disclosures also. So auditing of related disclosure is also a part. And that can only happen, or you can only audit the related disclosures when you know what are the disclosures, what disclosures you are required to make. Till the time I'm not aware about, okay, what disclosures are required to be made in a financial statement as per the applicable financial reporting framework, or let's say NDS, how will I audit? Let's say there is some special purpose reporting that is required for the bank, some estimates that banks are required to make, for example, provision for the standard asset, provision for the loss asset, or something like that. If I am not aware about the disclosures of those particular estimates in the financial statement, how will I audit the related disclosures? So for that, first thing I need to understand the requirement of the applicable financial reporting framework. So requirement of applicable financial reporting framework with respect to the disclosures. The estimates. What is the requirement of the financial reporting framework relevant to the estimates, including disclosures? Once I understand that, what will be the next procedure you will follow? Can anyone tell me what will be the next procedure after this? Anyone? I understood the requirement of applicable financial reporting framework. Now what to do? Come on, guys. Very important part. The next part. What you will do once you will understand the requirement of the financial reporting framework?
Sir, is there any information that can be obtained by me, by which I would understand whether there is any prescribed method or estimate procedure has been said or dictated by any framework or a law or regulation itself? I will check that. So it will be easy to understand me the process or and check whether the management has been using that appropriately or not.
Okay, so you will obtain the understanding about the estimate preparation or the methodology. If I summarize, you're saying you will obtain the understanding how the estimation is required to be made.
Yes.
Okay. Anyone else with different answer or something more they want to add? What you will do once you will understand, okay, this is the requirement of financial reporting framework. Now what to do? Okay, I understood AS, whatever AS it requires me to disclose this particular thing in the financial statement. What I will do next?
What assumptions and models are management are also using for making that estimates? I would understand those also.
Yes, good. And somewhere what I will do is, first of all, whether management is aware about that requirement or not. Whether management has made that estimate is a secondary thing. First of all, whether they are aware about that they are required to make such disclosures or they are required to make such estimation. For example, or a lot of companies, they don't know that how to record warranties. They never provide for the warranties. Even though they sell the product, their product has warranty period, but they never provide for the warranties. So first of all, we will understand whether management is aware about those transactions, events, conditions that require accounting estimate. A lot of companies do not book provision on doubtful debts. They say there is no doubtful debt in our company. Everything is recoverable today, tomorrow, or let's say after 5 years. But we are sure that our debtors will provide us the amount. So we do not book for the doubtful debts. But this is not how it works. Let's say if the company, that particular company ECL model is applicable. In that case, how you will justify the management's contention? Or management is required to make provision for the ongoing litigations. Management is saying, no, I will not make provisions. I was not aware that I am required to make provision for the ongoing litigations. Best example I'll tell you. Management at times violates some laws or regulations. For example, they did not comply with the income tax laws. Simple, TDS. They were not aware that they are required to deduct TDS on the payments made to the contractor. Okay, it's a company, but company was not aware about that they are required to deduct TDS or then they are required to deposit. And as they were not aware about the provision of income tax, they never knew that there was a penalty attached to the non-compliance, and they never made any provision for that or any estimate for the penalty. So understanding that how management identified those transactions, events, conditions that give rise to the accounting estimate is very important. And that should be your next step. After understanding the requirement of the financial reporting framework, understand how management is identifying the accounting estimate. How management is identifying the transactions that require need for accounting estimates. Not only transaction, but events and conditions that require accounting estimate. So on the one side, I'm talking about the risk, that estimation uncertainty and management biasness. On the other side, I am talking about a risk that management has not made estimates. Lack of estimates. Are you getting my point? This particular point gives the risk that there is a lack of estimations or lack of estimates that are required to be recognized in the financial statement. I can write this risk over here. Lack of recognizing accounting estimates. This is another important risk that you should look into when you are auditing the estimates. So tell me, okay, now I understood that, okay, I am required to check with the management, how you are identifying the transactions. How will I do that? How will I identify whether management is aware about those transactions, events, and conditions? How will I identify? How will I, identify, or how will I get a comfort on this thing that how management is identifying the transactions, events, and conditions? Or whether management is aware about those requirements for making accounting estimates or not? How will I check that as an auditor?
I would inquire with management whether they have any system or control in their system where they can identify such transaction and events and conditions. And after that, identifying how they respond or reassess or revise their estimates, I would also take understanding of that thing.
Okay, good. Very good. Anyone else?
I would also make use of past audit reports and financial statements where if I find any disclosures that have been there about any certain or significant event that may arise, let's say about litigation or something. So whether there is any change to that events and conditions that have been already identified or not, or either there is new events or conditions that have been identified by the management.
Yes, absolutely correct. So I will not only perform the inquiries with the management. So inquiries is the one part that I'm required to do to understand this. But I will gather information from multiple areas. Inquiries with management is only one part. But as you correctly pointed out, other areas are like relevant controls that are there, okay, that management is following or management has established for estimations, accounting policies or policies on estimations, understanding of the management about business practice is something that I will also, guide me or will provide me the understanding that how much management is aware about the business and the requirement of the business and the, estimation requirement within the business. Management's experience in preparation of financial statement. So let's say, for example, management is very experienced. They are part of a limited company, which is a listed also. So it will be very less likely that they are or they are missing some estimates based on their experience, based on their past track record, or some of the management personals are charter accountants, member of institutes. They are good in accounting and they are good in understanding the financial reporting framework, something like that. So based on the management's knowledge, management's experience, their understanding about the business practice, based on these particular things like policies, inquiries with them, understanding how they are identifying the estimates, relevant control, even in some of the companies you have a separate risk management function. That function performs a periodic review of estimates for the management biasness, an independent function within the organization, just like an internal audit. Or sometimes the internal audit function itself, they review the accounting estimates. They perform auditing of those accounting estimates. So you can also understand by reviewing the internal audit reports that how management is making those estimates or whether management is aware about those estimates or not. Okay, so by this way, you can, understand how much management is aware about the requirement of making estimates. Clear? Any doubt? Once I understand how management is identifying, the next question comes into my mind is how management is making estimates. So what is the procedure that the management is following? What is the assumptions that management is taking? Whether management is using any expert. So how management is making those estimates? And when I talk about making, it includes method, your model that is applicable in making those estimates, assumptions, then you have a relevant control again, then you have use of expert I'm talking about use of management's expert. Whether management hires someone or management themselves make an expert, then change in the method for making estimates compared to the prior periods. So change in method or policy in making estimates compared to prior periods. That is very important because that will give me a clarity whether any change has been made. And for that particular change, I will check reason and impact of change. So one thing is reason, that why management made that particular change. Second is the impact of that change on that accounting estimate. For example, till last year, management used to hire a particular agency to make an expert to make the accounting estimate. For example, we'll take the last question that was there, that the estimation on the plant and machinery part. Okay, complex valuation of the plant and machineries. Now, since current year, management decided to discontinue the management expert and decided to perform that estimation or the valuation estimate in-house. I will ask them reason why you are changing this, why you are not hiring management expert. So they may confirm, okay, now we have hired a person within the organization who is expert in this field. So we do not need the service of management expert. And the impact of that change is how much that person that the management has hired is experienced, how much that person is knowledgeable about that valuation part, how much that person is capable, his competency, his objectivity with respect to making such an estimate, and the impact of management biasness. For example, earlier management's expert was an independent guy who was subject to some code of ethics based in his professional body and who was subject to some standards. Now the person which is hired by the management is not subject to any of such things. He's an employee of the management and he's not a member of a professional body which earlier experts were. So the impact of the change on my risk assessment, on the estimation, on the estimate uncertainty plus the management biasness is something I'm required to evaluate. Then the important part that we are required to check with the management is how management is satisfied with the estimation uncertainty. How management is satisfied. When I say satisfied means how they have assessed the effect of estimation uncertainty. The effect of estimation uncertainty. That means that how management is ensuring that their estimate is much more closer to the actual result rather being far away from the actual result. Means how much they are how they are ensuring that their estimate is more closer to the precision rather than being very vague and very uncertain. Can someone tell me that how they will identify the estimation uncertainty? How someone will measure estimation uncertainty? Anyone? How I will measure this estimation uncertainty? Any specific method that comes into your mind?
method by which the estimation has been derived by the management. If it is derived from something information which is readily available from the market sources, I can have a relative lower risk of material misstatement that can be there due to this uncertainty of these estimates. Whereas if the sources of the data from which the estimation have been made, if it is relatively uncertain or say which is out of their control, or they can be subject to higher uncertainty, just like if it is based on the observation in the marketplace or government policies, where the risk of government policies changes are more, I can say that a relatively higher risk will be involved there.
Yes, good, very good. Absolutely correct, Hemant. Anyone else would like to answer this question? How will you measure estimation uncertainty? Simple. I'll give you an answer. To measure the estimation uncertainty, the simplest technique is to review the outcome of the last estimates made. For example, last year also I would have made an estimate. What is the outcome of that estimate in the current year will give you an idea about the estimation uncertainty. So, to understand the estimation uncertainty, auditor should review the outcome of estimation uncertainty or outcome of the accounting estimates included in the prior period financial statement. This will give the understanding that how much those estimates were out from the actual results. Now, while reviewing the prior period estimates and their outcome in the current period, okay, will give me that how much difference was there in the estimates that were made last year. That will give me an idea about the estimation uncertainty, that okay, whether the method that is management is using is accurate or not. In some cases you might be having the data, in some cases you might not having a data. So where you have the data, you should perform this kind of review to understand the estimation uncertainty. Now tell me, I'll give you one example. Okay, for example, management made a estimate for litigation of rupees, let's say 2.5 crores in last year, which turned out to be rupees 35 crores actual in current year. Current year auditor wants to qualify the financial statement of last year based on outcome of accounting estimates. Now, this is the question. You tell me whether the approach of the auditor is correct or not. Management made an estimate of 2.5 crore in last year for a litigation which had turned out to be 35 crores in actual in the current year. Now, current year auditor wants to qualify the financial statement of last year based on the outcome of accounting estimate.
Sir, here the qualification is not correct one, as it is estimate and estimate can be changed also. It can be lesser or more in the coming years, then it is not correct as per the auditor.
Yes.
He can't qualify for the last year in the current year, sir, because he's auditing the financials of current year.
Okay. Anyone else with a different answer? Anyone? No? See, as correctly pointed out, first of all, this particular exercise of review of prior period estimate, okay, and the outcome in the current year, it's kind of a hindsight. Means I am standing today, but based on the data that is available today, which was not there in the past, I am taking a decision. I am evaluating something. So this is known as a hindsight. And what I'm doing is I'm based on the data which is available today, which was not there in the past, I'm taking a decision that it is correct or wrong. Okay. This can give me understanding of the management's process for making an estimate, but that should not be basis of my qualification, or based on that, I should not be taking the decision. Okay, for the prior period. So the review is not intended to call the questions into the judgment made for the prior period, but the review is for the current year, my current year process. So based on this exercise, based on understanding the estimation uncertainty, auditor should not call questions on the judgment made in the prior year. Okay, so the review is not intended to call questions the judgment made in prior period. Okay, so the objective is not to made or not to call into questions the judgment made in the prior periods. Rather, it is to understand the current years or current periods process of making accounting estimates. I hope I'm clear. Any doubt? Tell me one more thing, that okay, by this way I can understand the impact of the estimation uncertainty. Is there any other area also which by measuring the outcome of the previous year estimate I can get comfort on? For example, where this kind of activity, reviewing the outcome of estimate of prior periods, will help me? In which area this particular activity will also help me other than the estimation uncertainty? In which areas this particular activity of reviewing the outcome of estimates included in prior period will help me other than understanding the estimation uncertainty? Come on, guys.
So
In which areas? Yes,
it can help me in current year's audit planning and risk assessment also.
that is there. Yes. So, in which area basically? So, planning or risk assessment is a phase of the audit. I'm talking about a specific area.
Going concern assumption के reassessment के लिए.
Okay. Going concern assumption. Anyone else?
Sir, it will also help us to for adjusting and non-adjusting event also in the
Okay.
financial
Understanding
statement.
the impact of subsequent events.
Yes, sir.
Okay, good. Yes. So I will like write it over here.
Sure, I can help with this. First, please.
So here it is, understanding the impact of subsequent events. Okay. What else? Any other area that comes into our mind?
Based on the outcomes, whether management is revising its process of making estimation or not, we will also check.
Sorry, based on the
Outcomes of their estimation, if it is far away from the actual position, whether management is revising its whole process, which may be bring into question the reasonableness or appropriateness of their assumptions. So whether management is able to identify this.
so for that, like you are saying the understanding of the management's like how much management is aware about the deviation.
Yes.
Okay. There is something similar that I'm expecting the answer. It is something near to that, but not actual, but something near to that.
Presumed risk of fraud, we saw that in case of that estimates, we have to take additional procedures irrespective of whatever risk of whatever misstatement we have there.
Absolutely correct. So let's say, what if I tell you that the estimation uncertainty which was there was purposeful, was intentional, that management knew the outcome will be 35 crores, but still they only recorded 2.5 crores to show a lesser impact. This was done on purpose to keep the books clean. This was done on purpose to hide the litigation and their impact, or to hide the impact of accounting estimate which could result in decrease of profit. So this is not only something which will help you to understand accounting estimation uncertainty, but will also to understand the fraud risk involved in accounting estimate. And for that, remember in SA 240 also, we discussed something on the management biasness and accounting estimates. That when we are going for for the management biasness, or when we are doing the audit for the accounting for the fraud, when we are understanding the fraud or risk of fraud, at that time we are required to check the management estimates. Remember that part we discussed when we discussed SA 240.
Yes, sir.
So management estimation is part of that particular area, is an area where there are high risk of fraud. Reason because it can be used to hide the events, or you can say transactions which have a negative impact on your financial statement. So It's a very, very important area from the fraud risk angle also. So this does not only give you clarity about the estimation uncertainty, but gives you clarity about the fraud risk also and understanding of the event, subsequent events also. Clear? Any doubt? Now, once I do perform all these activities, I understand the estimation uncertainty, I do assessment of the risk, I do understand the management process, I prepare a risk assessment. I give accounting estimate a risk, high risk area, low risk area, medium risk area. So based on all this activity, risk assessment is performed. Risk assessment as per SA 315 is performed. Now comes the next part, which is creating the response to the assessed risk of material misstatement. Here on this particular part, once I decide whether there is a significant risk, whether there is a high risk area, whether there is a fraud risk, now I need to create a response. So creating response or responding to the risk of assessed risk of material misstatement. As per SA 330. This part is basically known as the testing part, where I will be deciding what testing I will perform. Okay, what details I will check, what activities I will do or audit procedures I will perform to address the risk of material misstatement. So when I'm creating the response or when I'm responding to the assessed risk of material misstatement, I need to understand, I need to determine the subsequent events or events occurring up to the date of auditor report and the evidence regarding their accounting estimates. So for that, first thing I need to understand is events that are impacting accounting estimates, including subsequent events. We will see when we will discuss subsequent events or events occurring up to the date of auditor's report and how to audit that particular part when we will go to the relevant essay. But right now, here, just understand that yes, we are required to consider those events. We are required to identify those events, that whether such events are happening. Number two, I will test the management's estimate for such events. I will test the management estimate made for such events. Third, I will perform control testing or testing of operating effectiveness of such controls. The controls that we discussed in the start, that we are required to look into the controls, relevant controls. So later on, I will perform the operative effectiveness testing of these controls to understand whether the accounting estimates are appropriate or not. Now, let's come to the part where I'm talking about test the management accounting estimate. Now, you tell me, how will you test the management's accounting estimate? How will you test management's accounting estimate?
I will look into the test check data that has been used by the management for making that estimates, whether they are appropriate for the area which they have made. I will perform such recalculation to check whether they are accurate or not.
Yes. Okay.
Here also, I would look into the source of the data by which they are using this data to evaluate the estimates and deciding that estimation levels.
Okay. Anyone else?
Sir, we will also communicate to the management regarding their estimates on which basis they have making these estimates also.
Okay. But the question lies is that how will I test the estimates that are made by the management? How will I perform the testing of that estimate that is made by the management? Okay, today I'll tell you management made the estimate of this 2.5 crores. Okay, 2.5 cr for a particular litigation. How will you test that whether this is appropriate or not? How will you do that? You don't have the data of 35 crores because you are at the end of year.
Sir, firstly, we will check whether this litigation is exist or not.
Okay. Then
And the uh,
then anyone else? How will you perform the testing of this 2.5 cr?
I will look into the information or data that they have used to arrive at such a figure. That maybe some readily available information that can be there, that in such case, in such type of litigation, what is the general amount of penalties or whatever there. I can also refer this. That means I have to check the source of the information that have been used by the management.
Okay. So basically, you are talking about that you will check the first for testing of accounting estimate made by management. You will check source data. Now, when I say source data, you will go and check. It's again, that particular part, CAR, completeness, accuracy, and the relevance. CAR of source data. Perfectly fine. That is one of the area that we will do. Then I'll give you two more areas. So second area is method, model, and assumptions that we have seen just now. Whether these method, models, or assumptions are appropriate in the circumstance, are reasonable and relevant. So again, R&R of this particular part, that is one of the area, perfectly fine. And when I come to the disclosure, I would check whether the disclosures are in line with financial reporting framework or not. So disclosure as per applicable financial reporting framework. Simple. So first of all, these things I will perform to test the accounting estimate. Anything else do you think of testing that I can do testing like this way, apart from this what we have discussed or I have written?
Reviewing and recalculations, as I mentioned earlier also.
Yes. Good. Very good.
Effectiveness of the control that have been there by the management over such process.
So yes, operating effectiveness of the control is done. That is there. Testing of operative effectiveness. You are saying something, Vignesh?
Sir, I will appoint my expert to determine the probability of the outcome of the litigation. In this example, you said that, and I will obtain the report from him, and I will assess whether this estimate is made properly or not. That's all.
But what if the estimate is relating to accounting and auditing area? Accounting area.
I itself do a calculation, sir.
Very good. So, correctly pointed out by you also. So, as earlier also pointed out, that I have recalculation, reperformance of that particular estimate. I will reperform the estimate, or I will myself as an auditor will try to derive an estimate. So that is known as a developing a point estimate or a range. Developing a point estimate or range. Okay. This is kind of a reperformance or recalculation of the estimates. Now, when I will develop a point estimate or a range, there could be two scenarios. One, either you are getting the estimate which is prepared by the management because everything is matching and you are perfectly fine with that. Second, you have developed a point or range estimate which is different than the management. Now there could be two reasons for that. One, either your assumptions or method are different. Okay. Or second, there is some calculation error which is done by the management. If the calculation error is there, perfectly fine, ask them to rectify, matter over, close point. But what if the assumptions, method, or relevant variables that you have taken into the account while making the estimate is different than the management? What you will do? So let's say you have taken an assumption that there will be maximum penalty for the breach of this particular clause. Management is saying no, it will be less penalty, not the maximum penalty. How will you discuss them with the management that particular part? Come on. And any answer that how will you discuss that when your estimation that you have prepared is different from the management because of the different assumptions, method, and the some models or XYZ relevant variables?
I would look whether management have decided these assumptions as per his own knowledge or he is taking help of any expert. And if he is taking help of any expert, then I will look into that thing. Whether that he is professionally compatible, objectivity and all that, and we have this studied also earlier.
Okay. Understood. Anyone else with something more, or anyone else would like to add something more? So in this case, if your estimate differs from the management estimate, that gives you indication of the management biasness. Okay. Or you can say that gives an indication either of a fraud risk or a management biasness. So this, by this way, you can address the management's biasness in making the estimates. Basically, by this way, I will be able to understand whether management is biased in taking the assumptions or methods that are favorable to them. And accordingly, that will give me understanding that, okay, whether management is making correct estimates or not. Once I decide there is a higher management biasness, then the reliance on the management estimates will decrease, and accordingly, I will test myself. And if there is a deviation after understanding the management biasness, okay, if there is a deviation or if there is a difference basically between the management estimate and your estimate, difference between point or range estimate versus management estimate, then it's pretty simple. Understand why management has taken such steps or such methods or such, uh, you can say, assumptions. Okay. Understand management's method slash assumptions. If you feel that management methods or assumptions are appropriate, then you may need to rectify your method or assumptions. If you feel that management methods or assumptions are incorrect, ask management to rectify. Okay. If management's method or assumptions are not appropriate, ask management to rectify. Let's say if management is not ready to rectify that, what you will do? What you will do if management is not ready to rectify?
I will reassess my audit risk and accordingly give my audit opinion.
Absolutely correct. So if management is not ready to rectify, simple, understand the impact on your audit opinion, understand the impact on the financial statement, how much financial statement are out due to the wrong estimation, and whether there is a fraud risk or something like that. If there is a fraud happening that management is not rectifying purposefully, intentionally, you may have some additional reporting requirement with respect to the fraud, and you might assess the impact of that incorrect estimate on your financial statement and on your audit opinion. If management doesn't rectify, then assess impact on financial statement and audit opinion. And you may also modify your opinion accordingly based on the impact of the that incorrect estimate on the financial statement. Clear? Any doubt?
Sir, Here, those points would also come now, whether I am under any responsibility to communicate with regulatory authorities or not to, or whether to consider whether I can disassociate from the engagement.
See, now when I talk about accounting estimates, usually they are not of such nature that it will go to the adverse opinion. And usually, it is, again, they lack precision, that is for sure. So how much deviation is there, that is, is the matter that will decide whether you call it as a fraud, you call it as an, observation or something like that. Now, there are some genuine reasons also for management for not recognizing, estimate as per your calculations at times. Okay, so in that case, what happens is that, if management is not able to recognize that estimate because of XYZ reason, which is not intentional or something, management is bound by the policy. And that is, now not amendable, because sometimes, the policies are based on the group. So at that point in time, you may choose to qualify rather than call it as a fraud. But yes, if you identify there is an intentional fraud of such nature that it is required, that it requires reporting, then yes, you are required to report as per section 143(12) to the government.
Okay, sir. Yeah.
Now, one thing I just want to discuss is management bias or management biasness is not an observation, is not a point for qualification. Till the time you identify that, okay, there is a issue in the estimates that are made. So if there is a material deviation due to management biasness, then only you may qualify your or modify your opinion. But only based on the management biasness, you cannot qualify or modify your opinion. Okay, so till the time you don't have evidence, audit evidence, that yes, the estimates made by the management are not appropriate, are not reasonable, okay, and there is a deviation which is material in nature, then only you can qualify or modify your opinion. Clear? Any doubt till now? Any doubt? Thank you, Jenny. Okay, good, Hemant. So if no further doubt, then this was your essay 540, which was given in the study material also. And based on that, we discussed the detailed essay 540. Okay. Now, I would request everyone to go through the essay 540 from the study material. And, if you have any doubts, you can bring your doubts in the next session also. In the next session, we will be starting chapter 4. But before starting chapter 4, what I will do is I will take up some questions from this particular topic, essay 540. And we will discuss essay 540's question first, and then we'll proceed to the next chapter. Okay. So for that, I would request everyone to go through the study material, give a read to that particular chapter that we just now completed. Okay. And then from next lecture, we will start a new chapter and we will take up some questions before, and then we'll start a new chapter. Clear? If no further doubts, then thank you guys. Thank you for participating in today's session. I will see you in the next session. Yes.